Hey harvesters, and welcome to the channel where we run simple and straightforward options trading to generate a daily income. My name is Matt, and in today's video, I'm going to talk about the trades I executed for August 27th. I'm going to be talking about the covered calls, the cash secured puts, why I chose specific strike prices, why I chose specific expiration dates, and we're going to go into all of those details. Then we're going to take a step back. We're going to take a look at the last 95 trading days and check out the performance of me running my own options. Right? We're going to talk about daily values, weekly values, monthly values, and I'm going to throw out some estimates. And then we're going to see day over day and compare it to the SPY. And then lastly, I'm going to talk about the trades I plan on executing for August 28th. So let's get started. For anyone that's a returning viewer and subscriber, you guys know me. The first thing I like to talk about on my channel is my account overview. And right now it is currently at $178,728. I do this for two main reasons. One, you guys get to see in my actual brokerage account how much money I have, right? So I'm not going to be making up numbers. And then two, this is the amount of money I am using to generate the amount of daily premium, weekly premium, and so on. So there it is, right? Moving on to the Excel spreadsheet, let's talk about the last 95 trading days. August 27th, we generated $523 of premium. I didn't even think I'd be able to make this kind of money, but then my Oracle cash secured puts printed today. I was able to run a covered call on the QQQ pretty much at the money. And then I also ran another cash secured put on the QQQ. So between those three options, I made $523, which was crazy. I was super excited to see that type of number on a Wednesday. Like I mentioned, the account was somewhere around that $178,000, nothing new there. And over the last 95 trading days, I generated about $31,930 of premium. And then if we look at that if we look at this percentage, 21.76%, this is my initial investment of money that I put in. So from the money that I put in 2025, I'm up 21.76%. So I'm pretty excited about that. We are doing pretty good. Looking at the change in day value, today my account was actually down 0.74%. I'm heavily invested into QQQ, and NVIDIA's earnings came out today. And just from what I observed, I didn't really read into it or read any of the articles pertaining to that earnings call. But after the market closed, NVIDIA had its earning and it seemed to have dropped a little bit. So whatever investors saw, they weren't seeing probably, a significant momentum in some of their growth, some of their revenue. So therefore, I think some investors started cutting NVIDIA. And then by cutting NVIDIA, that is going to affect QQQ a lot. So therefore, I think that's why my account was down about 0.74%. And if we compare that to the SPY was down 0.08%. So end of the day, market was red today, but mine was a little more red than the SPY. You win some, you lose some, but my green days are definitely 2 or 3 times X versus this red day. I'm definitely down 7X more than what the SPY was. But I definitely think the market will recover. NVIDIA is still a great stock. It's not going anywhere. Leader in the AI chipsets, and yeah, nothing really more to say there. It'll bump back up and we'll still continue to make premium off of it. So moving forward, I'm winning about 97.89% of my trades, 93 winning days, 2 losing days. And we have about 85 trading days left. And we're closing into only having about 18, 17 weeks left in 2025. So we are slowly coming to year's end, trickling down one day at a time. And let's take a look at this hopeful number versus aiming for number. So this hopeful number is based off my trading performance. So since we have 18 weeks, I basically multiplied these 18 weeks number to the average weekly premium I'm making, which is about $1,520. And that number comes up to $27,368. However, for 2025, I kept a low ball number that I was fairly confident I'd be able to hit week in and week out. And that was about $1,000 a week. So theoretically, if we have 18 weeks left, I should make another $18,000 more. Okay, so moving on to some of my trading statistics, I'm averaging about $336 per day in premium. Like I said, for the weekly premium, I'm making that $1,500. And then for that monthly premium, I'm making about $6,485. In the yellow here, I have some estimates based off of my account's performance because I don't have 12 months of data. I estimated out what 12 months of data would look like. So ideally, if I continue trading exactly the same way as I am now, so though I would make another about 79,000. I would make $79,000 in a 12-month period. And the way I came up with this number is I took the weekly premium, multiplied it by 52 weeks, and then it got this $79,000. And if you look at that $79,000 compared to my initial investment, that's about 54% return. So that is fantastic. And then once you take taxes into consideration, it will be a little bit less. Once we scroll down on this spreadsheet, I will talk about that portion. But what I've noticed for these percentages, it ranges somewhere between 49 and 66%. And then moving down to the bottom of the spreadsheet, let's bump this over a little bit, make it more pleasant for the eye. My initial goal for 2025 with the actual amount of premium I'm going to generate was quite low because my initial investment was $86,000. But I did throw a significant sum of money. I think I threw about $60,000 into my account this year. Therefore, this goal was a little bit too low because I started generating massive amounts of premium after I put in another $60,000. So we're actually about $2,000 over my initial goal of $29,000. So that's pretty exciting. Moving down to this spreadsheet with all these wonderful colors. And the way this spreadsheet is going to operate is right now, everything is an estimate because I don't really have the data for all of these years because 2025 hasn't completed, nor has 2026. So ideally, the way I'm going to operate this cells and these these tables and these columns is for 2025. Once I complete 2025, I will input all of the correct data into these tables and these columns, or I would say these rows for 2025. I'm going to put all the data inside of the rows for 2025, and then I'm going to cell lock them so they're not going to update based off of my trading performance. Because every time I input and change values here, which are pulled from this top portion of my spreadsheet, all of these numbers are going to change. So if we're in a bull market, all of these numbers are going to change to the bull market numbers. If it's a bear market, all of these numbers are going to reflect a bear market numbers. And each preceding year, I'll cell lock each year, and then we'll have an accurate tracking of what my actual performance is year over year. So it'll be quite exciting. But as of right now, I only have estimates. So for 2025, I theoretically should make about $59,000. We're already at $31,000, almost $32,000. And we still have that 18 weeks to go. Might be able to make another $27,000. We might get close to $60,000. I am a high income earner, so this taxes will be a little bit brutal for me. So I'm going to have to sell out about $20,000 from my account to pay Uncle Sam because he's going to want his cut. And at the end of the year value, once we subtract, the taxes and then from the income, my account should be about $184,000 by year's end. Looking at the net gain after taxes, if we take taxes completely out of the picture, I'm going to be positive $38,000. And if we look at that as a return, that is 26%. And why am I talking about this part of the spreadsheet? Because I like to forecast what potential earnings might look like, because then it gives you something exciting and something to look forward to, right? If you don't have a goal and you don't write it down, how do you know how to achieve it? So this is a way that I'm able to look visually to see like, hey, if I continue doing all the right things and staying consistent with my trades, I'm not trying to do any cowboy wild stuff and try to, hit a home run. I'm trying to get these base hits so that we can score runs, so that eventually that we can, get off W-2 income. Or it really just depends on what you want to do. For me personally, I like running options this way and like running my Robinhood with covered calls and cash secured puts for two main reasons. One, it's an emergency fund. So say, for example, I lost my job for whatever reason, just running this trading and generating this premium, I would be able to live off of it a little bit until I'm able to then find work. But then the nice thing about it is it's less stress because I have money coming in versus if you get laid off, then you have no money coming in. So therefore, this is kind of like a contingency tool. And then the best reason is you can potentially get off of a W-2 income, because most of the time people work a day job. They don't really like what they're doing. They're doing it to support their family. So if there's a mechanism where you can make money and then eventually get off your W-2 income and then dedicate the time that you actually want to the projects you want to do, I think that far better, that makes for a happier lifestyle, healthier lifestyle, because end of the day, money, the way I look at money, it's not something to pay bills. Yes, it's a tool, but for me, money is time. The more money you have, the more you could outsource time events. So that one of those is like going to work. That's a major time commitment that you need to survive in today's economy, in today's world. So ideally, the more money you have, the more freedom you get because you have the money. So There's one thing you can't get back in life, it's time. So ideally, I have 2 key points where I'm going to see what my account is at, how much premium I'm generating per day or per year. That's going to be at 2030. I'm going to consistently work for the next, 4 years. Was it probably 4.5 years? My math is terrible. You guys know that. We're in August, so September, October, November, December, still counting my fingers. So I still have another 4 years, 4 months to make a determination. Hey, should I continue trading this way? Can I stop working based off how much income I'm producing here? That's going to be 2030. And then by 2035, that probably would be, if these numbers are relatively accurate, I was able to capture a pretty good bull run starting in April. So my sample size for data is relatively small. I still have to trade in a bear market, but there are some considerations I will take during that bear market. But by 2035, by 2035, I'm making $1.5 million. There's no way I'm working. That's plenty of money between, continuing to reinvest into, your investment so that you can continue growing your account and then being able to continue to live off of it, paying taxes, paying for a lifestyle. That would be plenty of money. Even by 2035, if I'm making half of that, what's 1,500 divided by, or 1.5 million divided by 2, that's $750,000. If I'm making $750,000 of premium per year by 2035, I think that's going to be a massive win. And I will also note that these numbers are as if I'm not putting in another single dollar. And actually, interestingly enough, I'm going to point out what I did today. So I was talking with a couple of my buddies at work, and one of the guys, he's a pretty good free spirit and that he's pretty much ready to stop working, but just kind of feeling out, kind of just figuring out what he wants to do in his life. And he kind of brought me to the idea of potentially not investing into my 401k anymore. And there was a couple of interesting points that he said, and I definitely agree with once I slept on it, once I thought about it, once I let it that thought marinate in my brain, is what's the point of a 401k, right? 401k, you put the money in there and it sits there tax free. But the interesting thing is, I think it's a scam, because they're not buying and selling anything in the 401k. You pretty much put it into a fund and then it just sits there. Nobody's buying or selling any of the stocks. You definitely could do that. I'm not saying you can't, but ideally most people, they just buy and hold and they don't move any of the money. So then I think about it. So there really isn't a tax advantage. Maybe if there's like the fund you're invested in, the ETF has a dividend, you're going to have to pay, long-term capital gains on it. I think that's like 15 or 20% depending on the account size. So that's really the only cost you would incur, is having to pay, taxes on dividends. So like, is that really a big deal? I don't think so. But if I decided to stop putting my money into a 401k and started putting it into my brokerage, I still would use the same concept. So ideally, like, I'm investing in, for my daily trading, I'm investing into QQQ, SPY, some individual stocks here and there, but I would beef up my account by taking the same amount of money that I would put towards, investing in the 401k. I'd be putting that same amount of money into my Robinhood, and I would just be investing into VOO, like VOO by Vanguard. So it's the S&P 500 that Vanguard has. And so the VOO, you could only run covered calls on them that are month long, I believe. I actually haven't looked into either month long or week long. But ideally, I would just use this. I would still maintain it as a long-term growth solution. So I really would not be wheeling and dealing the shares of VOO, but then I would be able to borrow against the VOO that I'm putting in there so that I could generate more premium in my investment account. So then I can get to my goals faster. So while one hand, I can do the safe route, invest in the 401k and then, have everything grow tax-free, but at the same time, or invest into my brokerage, be able to have more buying power because I'm putting in more money into the account. I think that might be a bigger benefit in what I'm trying to do. Because especially if I'm trying to retire in the next 10 years, or, sometime, whenever time of our choosing, I kind of throwing these numbers arbitrarily, but like, I'm beginning the very adult stages of my life, just, proposed to my fiance. She said yes. Then we're going to get married in the next year. Then we're going to have, potentially working up towards, having kids, how many kids, paying for kids, school, where do we want to put them, regular school, private school. There's all those considerations to take into play. But with that being said, this still gives you the flexibility, right? And so that's definitely something I am pursuing. So today I actually just did whatever my company matches, made sure I continue to invest that into the 401k, but all the other access that I was putting into that 401k, I'm just going to put it towards an automatic buy for VU and just not touch VU, just use the buying power to borrow against it pretty much. So that's kind of the thought process. Let me know what you guys think in the comment section if I'm absolutely, some would say, intellectually disabled for thinking that way, or if hey, that might actually be a good idea, that's something that you might adopt in your strategy. So my thought process, I'm definitely going to use the VU as a long-term buy and hold, and just use it to produce more income. I wouldn't run, I don't know if I'd say I wouldn't run options, but if I were to run options on the VU, the strike prices would be so far away from the money, the deltas would be so low, I'd probably be making maybe 5% or maybe 1% extra per year. But end of the day, that's more money than I'd be making in the 401k, or at least, and then I could borrow against it. So there's a couple of net benefits for that. And then of course, since we are already here, why not look at 2028 was when the 59 and a half years old would play out. So if everything were to stay exactly the same, right, in a vacuum scenario, I would be making $1.5 billion per year in either premium, appreciation, both. I'd be paying about $533 million in taxes, and then I would have about $3.8 billion in the brokerage account. After taxes, I would make $990 million, and that would be a return of about 35.1%, which doesn't seem so far away, but returning 35% year over year, that really hasn't been done. You can maybe do it for 2-3 years in a row, but when a bear market happens, that's really when you know if you're a good trader or not. And we will see when that point comes what my results will look like. Cool. All right, let's head over to where we are at for the week. For the week of the 25th, we are at $1,900. Guys, we hit that 4-digit club pretty much the first day of the week on Monday. We are in Wednesday and we're at $1,900. We're going to hit this $2,000 club, no problem. Maybe we might even hit that $2,500 club, because if I have another $500 day as I did today, or maybe another $500 day tomorrow, we might be even getting close to $3,000. We'll see. But the thing is, look, I've already won. I've already made $1,900 in the week, and my goal is about, $1,000. And even my estimates for the weeks based off my trading performance is like $1,500-$1,600. I'm even past that right now. So I really don't need to force anything in the market. I don't need to over leverage myself. I don't need to do anything too risky, but I'm still also not going to leave money on the table, So we're at $1,900. I'm pretty stoked about that. Looking at August, we are at $6,000. I'm happy we made it past that $5,000 club, because that $5,000 looked pretty lonely. So 6,000 is a better look in my opinion. We will see if maybe we can beat June's numbers, because ideally the longer you trade, the more money you should theoretically be making. So we'll see if we can maybe we can beat these June numbers. And then lastly, we already talked about the yearly amount of premium and appreciation. That's about $31,930. And the reason why I combine both of my appreciation and premium into one cell is because that's what I'm going to have to pay taxes on at ordinary income levels or capital gains levels. So it's just easier for me to track. So whatever this number is, whatever tax bracket I'm in, I think like the 32 or 35% tax bracket, and just calculate that for the taxes. And then come April 15th or a little bit before that, pull that money out of the brokerage, pay Uncle Sam, cry a little bit, and then move on with our lives. Cool. Let's head over to the other side of the spreadsheet and talk about the trades I executed. All right, guys, now that we are at the other side of the spreadsheet, I only ran 3 trades today, but that netted me $523. So that was quite exciting. Okay, so I want to discuss what happened this morning. So yesterday, on August 26th, my 573 strike price for QQQ, as we can see up here, was actually assigned away for me. So then the investor that paid me that upfront premium bought my shares away at that 573. But then I pretty much in the after hours bought another 100 shares back. So once August 27th happened, I had another 100 shares to then execute another covered call at the buying price of the 573. I was able to make $150 of premium because the QQQ opened at the 571.57, chose a strike price of 573, made a premium of $150. So, and then at the end of the trading day, I was actually assigned away these 100 shares of QQQ again, right? Because the QQQ closed at the 573.54, so that was about 54 cents above my cost basis. So since for a call, anything at the strike price or higher, that is grounds for execution of the option. So my 100 shares were assigned away. No big deal, because after my shares were assigned away, technically they haven't been assigned away because I'm on the West Coast of the United States, and usually they pull the actual shares out 9 p.m. Pacific Standard. But after, NVIDIA's earnings wasn't as strong as they hoped, I saw the dip in the market. So I was then able to then purchase another 100 shares of QQQ at the 571.99. So tomorrow I have another 100 shares going into the trading day. So I'm pretty much going to run another at the money, or maybe a strike price at the 573. So I'll rinse and repeat exactly what I did today. Hopefully the premium will also be $150 or better, but we will see. Nobody can predict that market, what the premium is going to look like. But yeah, bagged $150 off of that covered call. And then I also ran a cash secured put. Oh, I definitely need to update some of these dates. But then I ran a cash secured put on the QQQ as well. Chose the 569 strike price because I thought the delta and the $2-3 away, the market looked relatively strong to neutral today. So I didn't think it was going to go down. So then I chose a 569 strike price. Premium was solid, $117 a premium. I already talked about the opening and closing. This option expired worthless because SPY closed, or QQQ closed at the 573.54. And the way for a cash secured put to get assigned is the market would actually have to go down to the 569 or below for me to then get assigned those 100 shares. So then cash secured put, I get assigned the shares. Covered call, when it gets assigned, you lose the shares. They're taken away from you. And lastly, my God, guys, Oracle shares have been printing money big time for me. So if you haven't looked into running covered calls or cash secured puts on this stock, and you have about $24,000, that was a good investment to use or to trade with. So what did I do today? I chose the 232.50 strike price for this cash secured put. I netted $256 of premium. And you guys have to understand, these are week longs. So for me to then run this option for Wednesday, Thursday, Friday, 3-day covered or 3-day cash secured put, it was $256. So that was a ton of premium for a 3-day expiration. So I absolutely love that. And the amount of money I had to put into it wasn't that much. So chose a strike price of the 232.50. It's still currently active because the expiration is on Friday. So I'm going to be waiting for that. And then once we calculate the numbers, yep, it was $523. So that was a solid day of trading for Wednesday. I can't complain. I will never complain about a $523 day. Cool. So then let's head over to Robinhood, and I'm going to talk about what I plan on doing for tomorrow, August 28th. Now that we're back at Robinhood, let's take a look at what I'm dealing with. So right now, if we look at my stocks, I own 400 shares of the QQQ, but as I mentioned, 100 shares are going to get assigned away, and it's about 8 p.m. Pacific Standard. So there's about another hour before my shares are assigned away. So then I did front load buying another 100 shares at a cheaper price because I wanted to then run another covered call when August 28th opened, and I wanted to run it daily. So there's that. And right now, my buying power, once another 100 shares gets cleaned up, I should have enough money for my event contracts to then run another cash secured put on Oracle. If my margin status or my event contracts is low, I'm not necessarily going to risk it and then I'm not going to risk it so that I don't have to get margin called some shares away. But I still have about $228,000. Wait, hold on. Margin total. Yeah, so I still have about like $52,000 of margin available once 100 shares of QQQ get cleaned up. So that should be about $110,000. So there really isn't like a risk of anything bad happening, unless there's a cataclysmic, event in the market tomorrow. But we will see if that happens. So ideally, yeah, tomorrow, based off what I'm seeing here, probably could run another cash secured put on the QQQ, run another cash secured put on Oracle, depending on where it's at. So we'll go from there. Let's take a look at QQQ options for the covered call. So to run a covered call in Robinhood, you do sell call. And to run covered calls in general, you need to own 100 shares of the underlying. 100 shares is one options contract. And here we go. I bought these QQQ shares pretty much where it's at right now at the 571.98.99. So ideally, I would choose a, oh my God, if the premium was $427, that would make me a happy man tomorrow. Probably going to get cut in half. And if the premium is this high, I probably would choose a different strike price. I probably would choose this 573 because I would be able to get a little bit of appreciation. And I mean, this delta is super high. Super high. Yeah, I think it's, yeah, usually I make this video about an hour later, so I don't think any of these options have updated for tomorrow. But we'll just say this option is cut in half, so I would make about, you know, what was that, $180, give or take, maybe even less than that. If I can make another $150, I'd be pretty stoked. But yeah, tomorrow running a covered call at this 573 again is definitely what I'm targeting. Let's take a look at what a cash secured put would look like. So currently cash secured put is at this 572.10. Man, I hope tomorrow morning it's just at like 573 or 574. Make me happy. So for this cash secured put, it's the opposite of a covered call. So ideally, the way I envision choosing a cash secured put is a price I would actually want to purchase this stock at. So premium is one consideration, but then also like the price you can purchase the stock for, and then so that you can run covered calls. So that's kind of, it's the consideration you need to take. Yes, or today I ran a cash secured put at the 569. If tomorrow this 569 is available with $189 of premium, I'm probably going to take this again. But it really just depends on what the premium looks like, what the delta looks like. Does the market look strong? If the market is red, I'm not going to choose a strike price that's close to the at the money. I'm probably going to choose a strike price that's a few dollars away, because ideally I don't want to get assigned another 100 shares. I already have all of my cash tapped out, and then I do have a little bit of, you know, margin collateral for some for my Oracle cash secured puts. So I don't want to go too deep into the weeds. So yeah, let's choose this guy. Man, maybe we might be gearing up for another $500 day. That'd be fantastic. All right. So that's ideally what I'm going to do for the QQQ. SPY, I think the premiums are going to be a little bit lower. So I didn't really want to trade with the SP500, SPY. So ideally, let's just head over to Oracle and see what those premiums are going to look like. And if it's even worth running another cash secured put on it. Trade Oracle options, sell put. That's a cash secured put. Oracle is trading at this 234.65. I already have 2 contracts at this 232.5. And if I were to run one tomorrow at this current price, I probably would make $242 of premium. But Oracle is getting relatively close to this 232.5. So I might just choose this strike price of $230 just to be safe. Let's see what that delta would look like. 0.27 delta, which means there's a 27% chance of this option executing. So I definitely like that number a little bit more than whatever this 0.35 is. So yeah, so for tomorrow, I'll probably run this 230. And there really isn't like a rhyme or reason for how people choose specific options. For me, I more so will always side on premium. There are some circumstances where I will forego premium so that I don't incur a loss. So say, for example, you know, I have, you know, 200 shares of QQQ that are bought at the 580 or the 581, but the QQQ is currently actively trading at this 572 or 573. I'm just going to forego premium because I don't want to get my shares assigned away from me at a loss. That's the only time I'll ever like choose a different premium where it's not as beneficial, or like markets in a bear market. So ideally, so I don't realize a loss, I'll just take worse premium and then just gut it out until the market's recovering and back to normal. Cool. With that being said, guys, I really don't have much more to this video. Hopefully I can lock in, you know, another 200-300. Very nice if it'd be a $500 day tomorrow, but we will see what the market gives us. The market giveth, the market taketh away. So I like to be patient with it. I don't like to force anything. So yeah, that's pretty much it. Yeah, hope you guys have a good one. Stay locked in, stay disciplined. Matt out. I will see you in the next video.